Have you ever thought about how inflation, an economic phenomenon we hear about so often, might be slowly eroding your dream of homeownership? Inflation in its simplest form is the rise of prices over time. It's like a silent tide that can sweep away purchasing power before you even realize it's happening. Now imagine this tide slowly washing over the landscape of homeownership. Intriguing, isn't it? In the next few minutes, we will unravel the often overlooked impacts of inflation on homeownership. Before we delve into the specifics, it's crucial to understand what inflation is and how it works. Picture a loaf of bread. Today you can buy that loaf for $2, but if inflation rises by 3% next year, that same loaf will cost you $2.06. Inflation, in essence, is the rate at which the general level of prices for goods and services is rising, and subsequently purchasing power is falling. It's like a sneaky thief, quietly eroding the value of your money over time. But what causes inflation? Often, it's a case of too much money chasing too few goods. When demand for goods and services outpaces supply, prices go up. This can happen due to increased government spending, a growing economy, or a surge in costs like wages and raw materials. Now you might be thinking, a few cents on a loaf of bread, that's no big deal, right? Well, think again. When inflation rates rise even a little, it can have a substantial impact on your purchasing power. It means you'll need more money to buy the same things. It's like running up a down escalator. You have to run faster just to stay in the same spot. Now that we understand inflation, let's explore its effects on homeownership. Because when it comes to the world of real estate, inflation is more than just pennies on a loaf of bread. It's about the roof over your head. Meet John and Mary, a couple who had a dream of owning a home, but inflation had a different plan. John and Mary were just like countless others, working hard, saving diligently, and dreaming of a place they could call their own. They had their eyes set on a cozy 3-bedroom house in their hometown. But as they were about to take the leap, they encountered a formidable foe: inflation. Inflation, in essence, is the increase in prices over time. It's like a stealthy pickpocket, gradually chipping away at the value of your hard-earned money. For John and Mary, this meant that the cost of their dream home was rising faster than they could save. At first, it was the house price that escalated. The same cozy 3-bedroom house that was within their budget a year ago had now become a stretch, but that wasn't all. The cost of borrowing also increased. As inflation rose, so did interest rates. The affordable mortgage they had calculated was no longer affordable. The dream was slipping away right before their eyes. But the inflation monster didn't stop there. It also reared its head in the day-to-day expenses that John and Mary hadn't factored in. Utility bills, groceries, home maintenance costs, everything started to cost more. The cost of living was creeping up, making their home ownership dream seem even more out of reach. This is the reality that many potential homeowners face in times of inflation. It's not just about higher prices, it's about the compounding effects of those price increases on every facet of life. From the price of the house to the cost of the mortgage, from daily living expenses to unexpected home repairs, inflation can make everything more expensive. This is the real-life impact of inflation on homeownership. It's not just numbers on a page or statistics in a report. It's about dreams deferred and goals unachieved. It's about the struggle of individuals and families who are striving for a piece of the homeownership pie, only to find it moving further out of reach. As we've seen from John and Mary's experience, inflation can turn homeownership dreams into nightmares. But the effects of inflation don't stop at purchasing a home. They ripple through every aspect of homeownership. Let's start with property taxes. As the general level of prices goes up, so does the value of real estate. Sounds great, right? Not so fast. Higher property values mean higher property taxes. In fact, in some areas, property taxes have doubled in the last 10 years. And then there's home maintenance. Inflation doesn't just affect the big stuff, it hits every corner of your life. The cost of paint, lumber, even simple things like nails and screws, they all go up. And as those costs go up, so does the cost of maintaining your home. If you've ever had to replace a roof or update a kitchen, you know these costs can add up quickly. Perhaps the most significant impact of inflation on home ownership comes in the form of mortgage payments. If you've got a fixed-rate mortgage, you're in luck. Your payments stay the same. But if you have an adjustable rate mortgage, your payments could skyrocket as interest rates rise. In the 70s, for instance, mortgage rates soared to an astonishing 18%. Imagine what that would do to your monthly payment. Inflation also impacts the cost of utilities. As the cost of producing electricity, gas, and water rises, those costs are passed on to consumers. So even if your mortgage payment stays the same, your overall housing costs could still increase. Finally, let's talk about insurance. As the replacement cost of your home goes up, so does your insurance premium. You might think you're safe because you locked in your rate when you bought your home, but insurance companies reassess the replacement cost of your home regularly. And as that cost goes up, so does your premium. So you see, inflation impacts not just the cost of buying a home, but the cost of owning a home. It's a ripple effect that touches every corner of your financial life. As we can see, inflation's impact on homeownership is far-reaching and multifaceted. While the effects of inflation can be daunting, there are strategies that prospective homeowners can use to mitigate them. Let's dive into some tactics that can help safeguard your homeownership dreams against the rising tide of inflation. First, locking in a fixed-rate mortgage can be a smart move. When inflation is on the rise, interest rates often climb alongside. With a fixed-rate mortgage, your interest rate is set in stone from day one. This means your monthly payments will remain the same regardless of how inflation fluctuates. It's a bit like having an umbrella in a storm. It won't stop the rain, but it'll certainly keep you dry. Next, consider investing in home improvements. While it may seem counterintuitive to spend more money during inflationary times, certain home improvements can actually increase the value of your property. Think energy-efficient upgrades like solar panels or insulation, or aesthetic enhancements such as kitchen or bathroom renovations. These can make your home more desirable, potentially boosting its market value and offsetting the impacts of inflation. Lastly, it's crucial to budget for increased living costs. Inflation doesn't only affect the housing market, it also raises the price of everyday goods and services. So, while you're planning for your mortgage payments, don't forget to account for the growing costs of groceries, utilities, and general upkeep. It's about anticipating the wave and learning to surf instead of being swept away. Remember, nobody can predict exactly how inflation will evolve. It's an economic reality that we all have to navigate. But by being proactive, understanding the potential effects of inflation and putting these strategies into action, you can set yourself up for a more secure financial future. And who knows? With a little planning and foresight, your dream home might be closer than you think. With the right strategies, the dream of home ownership can remain within reach, even in times of high inflation. So keep your eyes on the prize and let's weather this inflation storm together. Hard inflation, as we've seen, can have serious implications for home ownership. This is a truth that often lurks beneath the surface of our financial landscapes. We've journeyed through the intricate web of inflation, dissecting its hidden impact, understanding its mechanics, and exploring its ripple effects on home ownership. Let's take a moment to revisit the key points we've discussed. We started by unmasking inflation, a subtle yet powerful economic force that can stealthily chip away at our purchasing power. We underscored the importance of understanding inflation not just as an abstract economic principle, but as a real-life force that can directly affect our financial decisions, particularly when it comes to buying a home. We then dived into a real-life case study that brought to life the profound impact of inflation on homeownership. We saw how a typical family, despite their best efforts, struggled to keep up with escalating house prices and the increasing cost of living driven by inflation. Next, we explored the ripple effect of inflation on homeownership. We discovered how rising inflation can lead to higher interest rates, making mortgages more expensive and putting homeownership out of reach for many. We also saw how inflation can affect the cost of home maintenance, making it more challenging for homeowners to keep up with repairs and renovations. But it wasn't all doom and gloom. We also discussed strategies to mitigate the impact of inflation. We learned that by being proactive, informed, and strategic, we can potentially navigate the inflationary waves and keep our home ownership dreams alive. So as we wrap up, let's remember the importance of staying informed and prepared. Understanding inflation and its potential effects on home ownership can equip us with the knowledge we need to make smart strategic decisions. Next time you hear about rising inflation, remember the unseen consequences it may have on your home ownership dreams, but also remember, with the right strategies, those dreams can still become a reality.